Hello everybody, my name is Nicole. I'm a technical analyst and private investor. And today, at last, I thought I'd look at things Chinese. The reason I haven't bothered with any of these for a while is that in the second half of February, it was Lunar New Year. So lots of things were just on holiday. So that's the end of that. And then last week from the, 7 days worth, from the 4th to 11th of March, was the Chinese People's Communist Party People's Congress. All nearly 3,000 participants met in the Great Hall in Beijing to rubber stamp. And they did, all of them, bar none, the next 5-year plan for China. So no wonder people are avoiding things in China at the moment in the last 4 weeks. There's too much to go for. Now, interestingly, an ex-deputy governor of the People's Bank of China came out this week saying that he was not that keen on President Biden's new $1.9 trillion package, and that he thought this could create tremendous uncertainty in financial markets. So obviously that's gone down like a lead balloon, hasn't it? But anyway, onwards and upwards. And so I'd start with the yield on a Chinese 10-year government bond. This is a weekly chart going back a good 2.5 years. And you can see that yields have rallied from a record low of 2.5% up to the 3.3% level, where they've been hovering for best part of 6 months, I think you'd say. And in fact, it sort of matches the price action that we saw in the beginning of 2019 through to the end of that year. So what I'm trying to say here is that the price of these bonds and the yield on these bonds is not at extreme levels. It is not gone wrong. There's nothing to look at here. Move on. If anything, I'd suggest that the 50% level of 3.3% and the 61% level of 3.5% will probably cap the yields, i.e. provide a base to bond prices. And the next move will be to lower yields. We're not there yet, but the moving averages have crossed on this weekly Ichimoku system. Moving averages have crossed to suggest the next move will be a drift lower. I suggest it'll be a drift, nothing dramatic. My second chart is another interesting Chinese one, and it's a futures contract, and it is the price of thermal coal on the Zhengzhou Futures Exchange. And you can see that this one, since the year end last year, over Christmas and New Year, has really changed its spots. It had been in a very neat, very slow downward drift, and suddenly it all kicked in. And this is partly to do with the cold snap, partly to do with the year end short squeeze. Massive volumes on the way up, by the way, that's important, but I'm quite certain that the move is temporary. We've had a gap, we're down again. That's partly to do with the contract change. This is not going to be exciting, but it just was a warning as to what might be. My third and final chart is that of soybean meal futures in Dalian. Again, a weekly chart. And you can see that this one too has gapped lower. Rather suspect gap, I must say. But it's retreated from very long-term key resistance around 3,800 yuan. I think it's on its way down to 2,800. Down, but not out. I think this is a very interesting chart. And good luck, everybody. I'll see you next week.